Ladies and gentlemen, let's bring in Scott Bauer. Let's bring in the CEO of Prosper Trading Academy. He's joining us this morning to get his thoughts on the inflation data. Good morning to you, Scott. Thanks for giving us part of your Tuesday. Hey, Scott, let's begin with the inflation data. It looks like mostly in line with expectations and in line with the trend that we've been seeing. No real concerns here in terms of runaway or spiking inflation related to stimulus still at this point, and this is on the consumer side.
Absolutely, and you know, it's next up, quite frankly. We got this number right in line. Inflation is, I don't want to say it's a non-event,
yeah,
but we're moving on here. We get PPI tomorrow, but to me, Ben, the big number of the week, and there's always the unemployment number or the jobs number on Thursday. The big number to me is what we see for retail sales, and I believe that is on Friday. Because this is one of the last times we're going to see this number coming out before the election. And how is the consumer in this environment right now, which is so important leading up not just to the election, but post-election into the holiday season.
Yeah, and how are they responding to a little bit less in their pockets for those that have lost some of the wage benefits and the added unemployment benefits as well? I'd imagine that's going to be a focal point as some of the dust settles from that.
No doubt about it, and that is the continuing ebb and flow of the economy right now is what's happening with stimulus and how that affects the consumer in their pocketbook. And not to, I don't want to not make light of the situation, but Amazon Prime Day, to me, that is an unbelievable indicator of how the consumer may react to this entire upcoming holiday season.
Yeah, expected to top last year's levels as well. That's sticking with the trend, to say the least here. I want to get back to that inflation data real quick here because we've been looking at the bonds, the treasuries, the longer dated, the ZB and the ZN, the range that we've seen. It does look like they're inching up a little bit here right now, which is kind of what you'd expect to see. I guess rates would be coming off as there's not a lot of inflation concerns out there. But it also doesn't look like as of yet it was enough to kind of break them out of this range that they've been in after the treasuries, the futures that is sold off into the beginning of October. For the most part this month, we've been range bound. If you take a look at the ZB contract, here's a good look at the 60-minute time frame. You'll see 175 roughly down to the 173, middle of the 173 handle. Scott, I mean, we've got a well-defined upper and lower extreme here right now. They have been coming off, but have lost some of the momentum to the downside. And again, with this number, seem to be inching up some here.
Yeah, they are inching up a little bit. And as you said, with yields actually inching up at the beginning of the month, we kind of saw the 1030 spread, actually steepen just a little bit, which we hadn't. And that was some of the inflation concerns, which to me, again, there's nothing really there. What's interesting, Ben, is the alignment of the dollar and gold, that it just continues to move lockstep. And with this CPI news this morning, I think, as you said, the dollar is really not moving. Gold is not moving. If we start to see the dollar move away from that 93 number, we'll probably start to see gold move as well.
Glad you got into the dollar there because that's where I was headed next, Scott. I wanted to get your thoughts right now. Hovering right around the 93 level. This seems to be a key area right now because we were just talking about the range that the bonds have been since the beginning of October. But, well, if you take a look here, this is the weekly time frame. We were pulling up the dollar versus the gold. As you mentioned, that relationship, that interesting inverse relationship, which often plays out. But I'm looking at the weekly time frame. I can see the dollar's basically been in a range. Here you can see on the candles, we're talking 91.75 roughly up to the 95 handle, but smack dab in the middle of it right now. I've got my eye on this. Scott, we've been talking about this dollar overcrowded trade. Where do you stand on it right now in terms of the weakness? Do you think we'll revisit that 91.70 lower level?
I don't know if we get down there, Ben, but I certainly think that there are some headwinds. When we traded up to above 94 just a few weeks ago, that was met with just fierce selling, absolutely fierce selling. And that, to me, really put a short-term top in the dollar here. Do we get back down to that 91.70 level? I don't know what moves it that far, but I do think this 93, 93.20 level here is really the short-term resistance.
Yeah, that was a big move. Last week, we traded up to 93. Here we can see the move. This is actually the 15-minute time frame. Swift move off that 94 handle last week down to 93. And again, as you mentioned, the recent failed attempt here at the 95 area. Fed Speaker Scott, I wanted you to get your thoughts on them. It seems like a little bit of dust settling after Fed Chair Jerome Powell on Capitol Hill. We had the FOMC. We had the minutes. We've had individual Fed speakers. It's been a galore, Fed speakers galore to say the least. Kashkari, though, really stood out to me. All of them seem like are pushing for Congress to do more, passing the buck in many ways. Some are debating if there's a more necessary. Well, I guess it's not so much the Fed speakers, but Kudlow is debating if there's more necessary. He hinted at how he didn't think there was. Where do you stand right now in terms of expectations for lawmakers as far as the stimulus bill? We heard about a piecemeal deal, it seems like a week or so ago. Now we're hearing about potential for $1.8 trillion, but it's still, it seems like there's nothing definitive yet on the table, and certainly nothing definitive as far as relief for those that have been impacted most severely.
Nothing definitive at all, and I think it's unfortunate for the people that need it most. And the closer and closer we get to the election, which is only 3 weeks away now, I think the further away we get from actually getting a stimulus deal, because politics are playing, on both sides of the table there. So I think it's going to be, in my opinion, I think it's a very low chance that we get a deal prior to the election, and people really need it, Ben. I think you're hearing the Fed speakers actually come out and say, we need a deal here, whether it's next week or 3 weeks or 6 weeks from now. I think that we need to know that there is something still on the table, that the people that need it most are hopefully going to get this hope, especially going into this time of year, going into that holiday season, because as we alluded to earlier, how are these people, how are the consumers going to spend with all of these question marks? The people that need this stimulus the most, are they going to cut back? And the trickle through down to the retailers could be devastating.
Yeah, definitely a bit of a black cloud that's been kind of looming overhead, and it will be interesting to see if they can get it done before pre-election. Many have hinted that we are going to have to wait, as you mentioned, until post-election results here. Scott, I wanted to get your thoughts on a couple, of the recent activities that are playing out, because it's also a big week, not only here in the U.S., but let's shift our attention to Europe real quick. The euro currency, the British pound, UK-EU negotiations are kind of coming down to a wire. We had some kind of mixed activity in terms of economic data out of Europe in the overnight session. I did want to just pull up a look at some of the numbers that we had, because I pulled the German CPI data in line with what we saw here today. Nothing of any real concern. It actually declined, down 0.2% month over month. The year over year also saw a decline of down 0.2. And then also the ZEW numbers, again, basically just kind of mixed, sort of suggesting there. You can see the CPI data, but we'll pull the ZEW numbers here in just a minute here, basically suggesting that this recovery is still, not heated necessarily, good but not great, I guess, as I've been calling it.
Yeah, how do you take this data? Like you just said, it's kind of just there.
Yeah.
Right? The inflationary pressures, to me, not just here in the U.S., but worldwide, are just not there. The recovery still is happening, but it seems to be very tame. In terms of, the EU and what's going on there, it's really status quo. To me, the numbers that really stand out are coming from Asia and China, and those numbers seem to continue to be really, really good.
Yeah, we were just talking about that with Gary a minute ago. The German ZEW current conditions fell. The economic sentiment fell as well. A little bit of a disappointment there. I saw the ZEW economic sentiment number slip. These are significant declines here to 52.3 for that ZEW economic sentiment number. Scott, I appreciate you joining us and giving us part of your Tuesday morning to help us take a look at the CPI data and a look across the board at some of the other products. We've been keeping a close eye on the dollar, as you have been as well, and we'll continue to, ladies and gentlemen. That's Scott Bauer. That's the CEO of Prosper Trading Academy, helping us take a look at some of the recent price activity now, or I should say fundamentals associated with the recent price activity.